Hello, everybody, and welcome to another Lean-In session. As always, I'm Michael Linke, and on behalf of the Australian Institute of Architects, it's fantastic to have you join me again, so welcome. Today, we're going to look at the issues surrounding the ABIC contract and access to capital. Over recent years, we've received an ever-increasing number of complaints from members that the banking industry refuses to approve clients' construction loans. And this occurs primarily in the housing sector and where architect-administered construction contracts are used. Specifically, we've seen examples where banks refuse to lend to consumers where contracts specify an architect as the contract administrator, where contracts contain provisions for monthly progress payments, where progress is assessed by the architect rather than a bank-appointed quantity surveyor, and where contracts have contained provisions for variations as well. So to counteract this issue, back in 2018, we conducted a member survey which used your feedback, and we presented those findings to the Royal Commission into Banking. We presented it to state, to territory and to federal government, small business ministers, to the ACCC and also to the ABA, the Australian Banking Association. However, the issues still continue to arise. It's a real pity. So we're keen to mobilise further, and what we're keen to do is take a campaign directly to the banks. Now, if you've been affected by this issue or you know others who have, we'd really love to hear from you. So today, for the next hour, is your opportunity to share your stories, and we'll be doing some live polling as well for you to give us your feedback too. This is your chance to contribute to a critical issue and above all, help us to deliver a solution. I'm really pleased to be joined today by the team that have been working on this issue. We have with us today Amy Goodwin, the co-principal at Project 12 Architecture. We have the Institute's past National President, Claire Cousins, and answering your questions that arise today as well, my colleague, the Institute's General Manager of Advocacy and Policy, Leanne Hardwick. So in this session, we'll be undertaking live polling just to assess the impact that this is having on you, and this will help us identify the next steps that we need to take to resolve this matter. Now, we're also very keen to hear how you and your clients have been affected by this issue. So don't forget that the chat box down below that you see is open and it's your friend. So if you have any comments, if you have any questions at all, feel free to pop them into the chat box there, and I'll go through these with Amy and with Claire and with Leanne at the end of the session as well. So what I thought I'd do first is start with a recap. And for this, I'll go to Claire Cousins, our past National President at the Institute of Architects. Claire, great to have you on board and welcome to the program. Can you provide us with a recap of the work that the panel have done, say, over the past 24 months on this issue?
Yep, thanks, Michael. Hello, everyone. Yes, look, this is a really big issue affecting many small and medium practices, and I suppose my practice is heavily affected by it as well. And I think we really need to try and find some good working solutions. Historically, what we did in 2018 was put a submission in. It was quite a big undertaking to the Banking Royal Commission, and for that to collect that data, we surveyed members, and it was a bit of a joint collaboration with Archie team and the ACA to try and get as much data as possible. And Leanne and her team kind of pulled it together, which was a great piece of work. I suppose one of the challenges is the Banking Commission, Royal Commission, probably had so many other challenges. It probably didn't, sit high on the list of challenges that the banks were kind of wanting to remedy. Leanne and I met with Anna Bly, the CEO of the Australian Banking Association in Sydney back in 2018, really to try and convey our concerns with her, and really try and also get across how the restrictions that often the lenders are putting on the contracts and architects and clients is completely counterintuitive. The key issues that we're aware of that the members are having regularly, that banks don't see the contract, the lump sum contract, as a fixed price contract. They kind of interpret it as a cost plus. There's often a pushback on monthly progress payments, which, as we all know as architects, is a much more secure way of assessing claims. They're kind of pushing clients and lending into fixed stage payments, which we all know is kind of not workable for architectural projects for the kind of cash flow for builders. There's sometimes and commonly outright refusal for the ABIC, and banks are forcing and compelling people to use an HIA contract. Variations, we're finding banks are requiring clients to fund variations independently. They kind of think that variations shouldn't occur, which we all know is unrealistic. Retention and security, the complexities of that. So some of our clients have kind of managed that on the side, and then also the introduction of the deposit. But I suppose that's a kind of a lesser issue with what we're talking about today. One of the challenges, I suppose, with the ABIC contract too is that it's we've got to remember it's a co-authored piece. It's a joint venture with the Master Builders Association and the Australian Institute of Architects, which does make, I suppose, making changes in the contract slightly more complex than rather than if it was a kind of an autonomous contract. I think we had a good reception with Anna Bligh when we met. She probably had bigger fish to fry, and we really tried to get across the fact that having an architect administer a contract actually mitigates risk, reduces risk for the client. Often many builders much prefer having a client intermediary between the client and the builder, those two parties. And also if it mitigates the risk of the client, then ultimately that's mitigating risk for the lender and the bank. So I suppose over the last 12 months, there's been less active work. We've kind of been working on this in the last couple of months, but obviously the year has kind of got away from us with other pressures and with COVID-related issues, all trying to keep our practices afloat. But Amy and I've been kind of talking with National Policy and Julia Cambage, the Institute CEO, about how we really need to find some immediate kind of solutions or workarounds, and then also what is our long-term strategy. And we felt that if we could gather and garner more data in a different kind of framework, which we'll poll everyone today. And we felt we got survey fatigue, but this is often quite a good way to gather data quite easily and quickly, and also get more anecdotal information from members directly that we can then try and use that to leverage. So, but Leanne will go into that a little bit further down the track. So I don't want to step on anyone's toes.
Perfect. Thank you, Claire. Let's move to you, Amy Goodwin. Amy, welcome to the program. Great to have you with us. Let's go through what are some of the typical issues that you've seen members face in this predicament?
Yeah, thanks, Michael, and thanks everyone for joining. Look, it's really building on and, further to what Claire has just outlined. Those issues are still very much ongoing. As co-chair of Small Practice Forum in Victoria, I know this is an issue that is impacting a lot of small practice members, and I know medium practices also. But really, I think, sometimes it's just that you can't actually get mortgage or financial approval on the ABIC contract at all. So we're being forced to administer a contract on a master builders or a HIA contract that doesn't have a specific role for the architect written into it. And sometimes that agreement is no more than a handshake between all the parties involved, or a letter that just says, yes, this is the architect, will be administering the contract on your behalf, for a contract that isn't really designed for that to happen. Banks enforcing quantity surveyors to assess payments at the various stages. So at a significant cost to the client is another one. And then often the quantity surveyors are just asking the architects what their assessment is anyway. And so then the architect is still doing the work. It's no different to if the architect was assessing that progress claim. The quantity surveyors are just using that information and relaying that to the bank. As Claire mentioned before, banks enforcing the stage-based payment claims. I mean, we've got around that by introducing additional stages into, and above the kind of the standard base frame lock-up stage. But then that is even subject to the banks approving that, and the mortgage brokers kind of running through that. And then it's just even then that process is explaining it to the client and what those additional stages mean. And as Claire says, on big, large residential projects, there's a huge cash flow issue potentially for the contractor. So that just, needs to be considered. And ultimately, I think it's the stress, the time and the cost to the clients and the architects, the time to sit there on the phone and try and explain ABIC to a mortgage lender at the banks, to explain to them it's not a cost plus contract. And then ultimately the loss of income and potential and the administrating, like the ability to even administer a job as an architect, with sometimes the clients just deciding that, fine, we're not going to use your services past this point if we can't use this contract. And so I think that is a kind of huge stress for members potentially. And I think hopefully we can find a way to kind of work around it so we don't, we can find a solution that works and for all our members.
Thank you, Amy. I would say as well, there's some really good comments coming through on the chat, and there's been a really interesting question posed to everybody, not only the panel, but also to the 150 plus people that we've got on the channel. So do have a good read through the questions. If anybody has got any responses for Anna, this is Anna Dutton. She's put in a question about a demand that the bank has placed on her to provide a written statement, which is effectively shifting that risk onto the architect. If any of you have any of those stories, horror or good, please do feel free to pop those into the chat. And of course, Leanne Hardwick, our GM here of Policy and Advocacy, will no doubt, if we need further information or evidence from you, she'll be in touch, of course. Let's move now, if we can, to a poll. What we would really like to do is it'll be a little bit interactive. This is the final lean-in for 2020, and probably the first time I've run a live poll really in this way, shape and form. So what I'm going to do is I'm going to launch a poll, and hopefully you should be able to see that coming up. I'm just wondering if you can give me a thumbs up on that one, Amy. Can you see that in front of you on your screen? Perfect. What we'd love you to do, there are a number of questions on here, not many. Okay, there's really only 7 questions. We'd really like you to start voting on those. So you can see the first question coming up is, over the last couple of years, how many single residential, that's either new resi or any alterations and add projects, has your architectural practice completed? So anything up to 5, 5 to 10, 10 to 20, and so on. So if we can get you to vote on those, that would be fantastic. The second question relates to, on average, how long does your single residential, again, new or alts and adds projects take to complete? And I can see votes going in there now, which is great. The third question is in relation to the typical construction contract value of your single resi projects. Again, just pop in your details there. This is the kind of evidence that will really help us. It should only take about 60 seconds max to get through.
Michael,
yes,
novice question, technophobe question. How do we actually make I don't know, there's nothing to, you're just clicking it? You know?
Yes, you should just be able to click on it if you're on just a normal PC. I can see
9 people.
Yeah, maybe as co-hosts we can't, because I can't.
Maybe I can't do it. Okay, that's maybe what it is. Okay, we're not allowed to put our data in. That's fine.
I'm so sorry.
We'll throw you out at the end.
I'll add it in later, Claire. I really apologise, because it is critical that we get
to check that I couldn't work it out. I was a bit thick. So anyway,
that's fine. And I see that Anna on question 6 says she can't select multiples. I'm so sorry if you can't. It's a bit of a pity. It's pick the most popular one, Anna. I'm so sorry. We are limited somewhat in our Zoom technology, and I probably should go back to Zoom school for this, but sadly, just pick the best one that fits you. Even if you have multiple examples, just pick the main one that you struggle with, if that's okay. We'll just see how this goes. We've seen 37. There's 159 people that this could go out to, and we've seen 40 or so. We'll keep it going for a little while anyway. Some good comments coming through on the chat. Brian says that many projects do take more than 12 months to complete, and that's absolutely right. And we should have in one of those questions, in terms of resi questions for new and alts and adds projects taken to construct, there is predominantly 60% of you actually saying that there's 10 months or more.
The reason, just on that, Brian, the reason, the reason we listed 10 plus rather than 12, because I totally agree, almost all mine would be 12 plus. But the reason we said 10 was we've often found when you're able to sometimes, when you've been mandated by the bank to use fixed stage payments, they have a maximum of 10, because that's what I think the computer programs often allow. And we've done that on a project that did run for 10 months. But in a way, what we were trying to capture was there's many projects that are above 10. So that's why it does seem like a bit of an ambiguous number, whereas 12 is more common. But we thought that that was kind of the strategy in being able to use this data to advocate back to the banks.
Graham has asked a question. This is probably for you, Leanne. This is just in relation to the question number, the 7th question, when talking about using an ABIC contract where single resi projects hold retention on the builder. Graham's asked about retention can include bank guarantee. Is that correct, Leanne?
I'll actually have to ask Claire that.
When we say with this question, that would either be cash retention or bank guarantee, but either would be, if you use either, we would consider that retention. And so that would be a yes. It's not just cash retention. Sorry, we probably should have phrased the question slightly differently. It's more security rather than retention, because technically a bank guarantee is not retention, it's just a form of security. So if we can acknowledge either in this question.
Perfect. Yeah, we'll keep this going just for a little while longer. We've seen, which is fantastic, just well over half of you have completed the survey. So thank you very much. We also have this survey live in SurveyMonkey. And what I will do for everybody that's registered today, I'll send out a thank you email just to recap with the recording of today's session as well, so you can watch it again if you need to. But what I will do is I'll send you the link to SurveyMonkey, because I'm very conscious that a couple of you can't submit. I'm not sure why, and I apologize to you for that. What I will do is I'll send you a link to SurveyMonkey where we ask the exact same questions. So this is just a bit of a snapshot. It'll give us a real healthy level of data that we can then take in our next steps to where we go from here for the banks as well. So what I thought I might do is just quickly run through, and we might be able to get commentary from yourself, Amy, Claire, and of course yourself, Leanne, just in relation to the stats that are coming through. So we can see that 65% of people on this call have completed up to 5. So in the smaller data set, I suppose, there. And so, yeah, 70% now have completed up to 5 single residential projects in the last 2 years. So generally more smaller practices responding there. The majority for single resi projects at the moment are well over 10 months. It seems, which is good, 60% of respondents there. Typical, about 50% or so with that sort of $500,000 to $1 million property mark. And interestingly enough, in terms of using ABIC contracts, 40% always, 50% sometimes, and only a fifth of you, just less than 20%, have said that you never use them. And interesting that there's a number of others. It'd be quite fascinating if anybody has got any questions as to why they don't use contracts, and you've put other as a reason, just to pop it into the chat for us, because we will download the chat. And of course, if we have any questions afterwards, we'd love to reach out to you for further data and intelligence on that as well. What I might do is close that off. I might actually leave it going, if that's okay, just for a little while longer, just to get some more robust data. What I might do is move to you, Leanne Hardwick, the Institute's General Manager of Advocacy and Policy. Welcome to the program. Great to see you again. What tools, what resources, or what handouts can we use to arm ourselves in the battle with the banks?
Okay, so what we're planning to do is, once we've refreshed our information today, we'll be having a look at, well, we're going to be creating some materials for members to actually give to their clients about why it's a good thing to use the ABIC contract. We'll be looking at actually going and meeting with people at the banks in their head offices to have a chat and try and explain why ABIC is such a good contract and why it actually has more benefits than not using an ABIC contract. So it's all about educating people, and it's all about also asking them where they see the biggest risk is and why they think that ABIC is a risk for them, so that we can better understand what the problems are. And I guess the other thing is, you know, in conjunction with MBA, working out how to promote ABIC as a better contract.
Let's go to some of the questions. I've received some in advance, which is great. And so let's go through those. The first question that I've got, which has come to me yesterday, and this is an interesting question, it's somewhat controversial. Are banks lazy? Are banks just generally being lazy in this approach? And are they wanting just to save administration costs only by allowing the simple, stupid method, or are there other motives? What's your response? I'll take that from any of the panelists.
I actually think that the banks do prefer to use it, like it's a systems approach to them, so that, you know, for instance, with the progress payments, they don't want to change their IT systems to have more payments rather than just the standard, bog standard 6 or whatever they allow. So I think that that is a problem. It's about the systems that they have in place. And I think they see that the ABIC contracts are such a small proportion of what they deal with, so they don't see that it's worthwhile to actually change their systems. So the idea for us now is to actually approach it and more selling the contract and selling the benefits of having an architect administer the contract, so that we actually show them that they will be reducing their risk and it is worth them changing the system.
I think this is a simple yes or no question. Is this practice actually legal under the ACCC laws?
Yes, it is.
Legal or illegal?
It's legal.
Legal, yep.
Yeah.
Okay, it is legal. Okay.
I mean, banks are able to set their own conditions for lending. and if they don't want to use one particular contract, there's not much that we can do under the law to actually get them to change their practices.
A question here from someone that may be somewhat defeated, but is anything likely to change? Do architects and builders that work for them have enough influence, or are we, quote, too small fry for the banks to worry about?
I mean, well, one of the things we've been discussing is that the big challenge is, as Leanne said, the banks, there's not a lot of motivation for them to change. And there does seem to be, and I saw Sarah Lake had kind of put some comments in there, and where there's often, and I have seen those emails from banks where banks will say, how to identify a cost plus contract. It's basically one that an architect administers, which is completely quite discriminatory, really, because it's clearly not a cost plus contract. I think the strategy that we're talking about now is actually to have this data to talk to banks about, but rather than just lobbying and saying, okay, we need you to change, it's actually having maybe more strategic conversations to really understand what are the pressure points, what do they see as risks, is it, for example, is it that it doesn't have the word fixed price contract on the cover, or and really trying to understand what those barriers are to allowing this to happen, or to allow ABIC contracts to be used, so that we can take that information back to the Institute's contracts committee and the master builders, to try and have that remedied, so that there is an understanding to allow them to move forward. Because at the moment, I'm personally facing two scenarios. Either you have to work with an HIA contract, and then the Institute does have on Acumen a kind of a supplement or a special conditions that you can use with that contract to allow an architect to have an administration role, or we're being permitted to use the ABIC contract. However, the banks are forcing a quantity surveyor onto the client, which is sometimes costing upwards of $20,000. And they, as Amy said, they really do very little. Sometimes we're finding that they're rebadging our progress certificate as theirs, and then charging $7,000 to do an assessment at the beginning, and about $1,350 per month to do the assessment, which we've already done. So there's a and when we did this initial advocacy work a couple of years ago, we reached out to the master builders, and Julia Cambage has been doing a lot of work with Danita Warren, who's the national CEO of the MBA. The challenge with the MBA, though, is it's a federated model. It's quite different to the Institute. So any revenue that's generated from the ABIC contract goes to the national coffers, all the states, which is probably why all the states are more motivated to sell their own local MBA contracts, because that generates state-based revenue, which is obviously what the states and territories are looking for. So there's, I suppose, a slight conflict, which doesn't help us, in our cause. Sorry, I'm talking in circles, but yeah.
No, I get what you mean. Thank you, Claire.
Sorry, Michael, just some of the other things that we've been talking about, Leanne, Claire and I, in preparing this, is it's not just the risk that we need to understand from the bank's perspective, but also try and convey to the banks that typically the ABIC contract and an architecturally designed project is a good client for the bank. I mean, you would think it's desirable client, and they're often professionals earning, a good salary, own one or two, the value's higher than a kind of average volume build. So I think, we can convey that to the banks also too, in terms of from a consumer point of view. It's a kind of, they should want this type of client.
That's right. And then also the risk that, sorry, Michael, the risk that also an HIA contract brings is it is often weighed slightly to the builder, or probably less of a fair contract. And similarly, fixed stage payments don't motivate or incentivize the builder to push a project along. That's why, and often even when you go and put a great amount of detail into what completing a stage constitutes, it's still very ambiguous, and I think is far more risky from a consumer's perspective as to what has been completed versus a more of a trade breakdown percentage assessment each month.
Interesting. There's some lovely comments coming through on the chat. And Wim has a really interesting one. He says it's very clear that the rejection of the ABIC contract is purely due to uneducated people in the lending system. he talks about it being a lack of knowledge re contracts by bank lenders and finance brokers, and it says that he's recently had to educate some hotshot lender for the first principles around construction contracts. Should the master builders and the Institute of Architects go sort of Harvey's in terms of an education program to make sure that those messages are out there? Again, Leanne, is that something, I mean, a public awareness campaign, is that on the agenda?
Yeah. Yes, definitely on the agenda. And I think us going directly to the banks with, with making the case will actually re-educate them about the level of risk that they'll incur. I see there's something from Hamish about, is there a feeling for, is this broad bank policy or is it based on local regional office decisions? When we did the survey in 2018, we actually found that it's, in some banks it is broad bank policy, but different branches have looked at it in different ways. And it's not just the big four, it's actually right across the board. So it really depends on the branch that you go into. For some of the banks, or sometimes they'll look at their bank lending policy and have it specifically stipulated that if an architect is administering a contract, then it's not acceptable.
And I mean, whether it's appropriate to discuss it in this forum, but one of the other things we've talked about too is whether the willingness to listen and change with the big four, whether they will change, none of us can tell, basically, but whether sometimes the method of or the stick or the carrot, I suppose, is whether then advocacy to tier two banks, whether it be someone that seems to be far more open-minded like Bank Australia, who's been doing some great work on environmental policy and low interest, low mortgage and lending rates if you build a 7-star house rather than a 6-star house, whether there is an appetite to understand and there's more agility for them to be adaptable and then in a way that that's something that can be advocated broadly, that it's kind of when the consumer starts to move away from the big four, that might also be another reason that they start to listen and are willing to change. So it's kind of something that we thought we would explore.
There's a number of questions that have come through from people to say, has anybody actually got a bank that they can recommend? Is there anybody out there that we haven't really had the amount of issues that we have perhaps with the big four? Knowing the big four generally are going to be sort of the most easy in terms of access to capital. The smaller lenders generally have more sort of refined restrictions which may prohibit lending sometimes. But so if anybody does have any, I mean, you talked about Bank Australia there, Claire, you gave a great example, but if anybody has got any recommendations as to which banks are easy to engage and understand the ABIC contract, then we'd welcome those comments as well. A question as well with the ABA, because we've approached them before, again, Leanne or Claire, this might be one for you to answer. And this is a question from Nigel on the chat. And he says, why not get the ABA involved with the next version of ABIC contracts? Could you inculcate them into the next iteration?
I don't think the ABA is the right vehicle to be involved in writing contracts, writing the next version, because they represent bankers and the banking association. So it's actually the banks themselves that make these decisions. It's not driven by ABA policy. So, and I don't think they would see themselves as that as the appropriate mechanism. They're actually more like an industry body for banks. And I don't think it would be useful.
Yeah. Interesting in the chat as well, Andrew said that Commonwealth Bank have been the best ABIC lender for him, which is great. Belinda has said that Cairns Bank support the use of ABIC contracts as well. So there are some success stories out there, but equally there's a huge amount of challenges as well. Gary says, of course, in the chat that ANZ funded one of his projects. They use staged payments, which we're seeing a lot come through. A lot of people are claiming that same thing, that yes, they accept ABIC, but it's predicated on the basis of having a staged payment as well. And he says that the builder added in extra stages which were accepted and then accepted us as the architect to sign off at each stage as well. Mahalath has said that Regional Australia Bank have never had an issue as well. So this is great. If we can get a really good library of lenders that that you've experienced no or minimal issues with, then we'd welcome those comments as well. Let's talk about a couple more questions, if that's okay. And this is I'm just sort of reading through the comments as they come through. And this is from Ross, and he says, look, the big problem here is that you can't actually talk to a bank. At best, institute representatives might be able to get into someone at sort of that middle level of management who quite often don't understand the issues and have no real authority to influence. And we find that obviously with, you know, big global organisations or major national organisations like NAB or Commonwealth Bank, it is difficult to get to the top of the food chain. What sort of proposals do you think you can counteract that to influence change?
I think we need to find the right person at the right level within the bank. That has been difficult in the past, but I'm going to make it my mission to make sure that we can actually find someone that can exert some influence. And I think after the Banking Royal Commission, and the report that came out, and all of the banks now are supposed to have like an ombudsman type person there who can actually sort out your problems and get you to the right person. So that's who we're going to be targeting, I think.
So along the sort of ethics lines in terms of, you know, equality for all and that sort of thing. So we just need to find those sort of people as well. A question from Tony on the chat. He talks about our engagement with the ACCC, be it Rod Sims or whoever it might be at the ACCC. But have we spoken to the ACCC on this matter, and what is their position and what's their advice and guidance to us at the Institute and as at Master Builders?
Yeah, we did write to the ACCC, and we've also written to all of the consumer affairs type bodies in each of the states and territories, and also to small business ministers about this issue. The ACCC doesn't see it as an issue for them, and it doesn't seem to fall under their sort of trade practices type legislation. So.
Okay, thank you, Leanne. Andrew's on a plane randomly, so he can't hear everything that's being said, but he sent through a number of questions on the chat, which is interesting. And he makes a statement. The banks don't care about what architects and their clients want. They are only concerned with risk. And we haven't really talked about risk to a great degree, but he says that banks are really only concerned with their risk profile due to architects signing on of seemingly indeterminate payments. So here's a couple of questions, and this is up for anybody on the panel. Has there been any studies on the number of defaults or disputes or bankruptcy under the HIA contracts versus the ABIC contract? Is that, have you done any research on that side of things?
It's really hard data to get that, Michael, and I know Warwick Mahali has been looking into a research program potentially through Architeam to try and get that, but even then I don't know whether you can get information on defaulting or on a contract. It's actually really hard to obtain. Leanne, I don't know, could you even gather that? Where would you even be able to obtain that information?
No, I actually had did an initial search to find out about bankruptcies to see whether that would be some data that we could use, but it's really hard to gain that data, and you don't really know whether it's an architect-administered contract or whether it's an ordinary contract. So it's just not possible, I don't think, to get enough data to be able to use those kind of statistics.
I think two of the things that we could be leveraging or advocating, though, is just looking at some of the results, in that most, so 66% of projects hold security on a builder that were polled today, and so that's very different to HIA. There's no security held on those projects, and the other one was that. Sorry, I just lost my train of thought. What was it? Oh, that I think Andrew kind of rightly commented that. You know, I suppose a key part of the advocacy is also reminding banks that we are trained in ABIC contracts and carry professional indemnity insurance. And I'm always kind of, you know, reminding everyone in the office that if we over-certify, we're liable if we've over-certified and if there was to be a problem on the project. So that there is the architect has to play a very independent role in that. And I think banks they do see us as adding risk and adding cost rather than actually mitigating risk.
Hopefully you should be able to see, I'm now sharing the results of the poll. Thank you very much to everybody who's voted on that. So thank you so much. Do have a good look through those results. We'll share those as well afterwards. Let's get back to some of the questions as well. Again, a question for the banks. We obviously don't work with them and for them, but are the banks aware that architects carry mandatory professional indemnity insurance for their work? I would imagine so, but
probably not. Yeah.
Probably not. Okay, there we go. Are there any stats on 5 staged payments on large projects stressing the builder and causing defaults and bankruptcy? Again, putting financial pressure and the onus for back on.
It would be almost impossible for a builder to do a large project on the 5 base 5 stages, I don't know how they would manage their cash flow doing that. But that's why often there's that review process of seeing what other stages can be implemented and agreed by the builder, the client, and ultimately the bank.
Absolutely. Okay.
It's really that lending method has been kind of based on volume built 12-week construction programs, where the builder is actually getting a claim in virtually every 2 weeks. So it's completely fine for their cash flow. Whereas with five or six stages on a typical 12-month renovation or new build, there might be 3 months that pass before a builder can get a claim in. So,
and your joinery package might be worth 200 grand alone, let alone, to get to, so it's a risk for builders. Sorry.
And I noticed Tammy on the chat, she talks about proposing to remove staged payments on her next contract and return to the traditional monthly progress payments using a lawyer who's prepared that special conditions variation form. And her question, again, for anybody on the chat, please do respond to Tammy. Has anybody else altered their contract just to remove staged payments but still having struggles, still continuing to have problems with lending authorities? Put your comments in the chat as well. Let's go back to the questions again. This one's from Linley, and Linley asks, would professional indemnity insurers have an idea about which contracts are common to liability problems on a project, and could they be approached? Perhaps your comments.
That's a good idea. I don't know whether we've done that, Leanne, and spoken to Planned Cover about any data on that. But even just to have, while perhaps they'd be seen not as an independent party because they're a fully owned subsidiary, but just some feedback or some, given that they clearly understand the role and the responsibility and the role and responsibility of the architects, that could be a good avenue to use as well, given that they are the ones that cover many of us for our PI.
Yeah, I'm sure we can approach them and see what data they've got. The other thing that the Institute is doing at the moment is actually trying to get data on to do a research project around novation of contracts, but that of course isn't in the ABIC contract, that's related to bigger contracts. But that data on defects might also be able to assist us as well.
Interesting, a question that's come through from Belinda on the chat. She says, look, given this issue affects builders, it affects clients, it affects obviously us as architects, is the Institute working with other industry organisations on this problem? For example, master builders. And she makes a very good point that a combined voice always gains a greater traction. We have obviously talked about master builders and their seeming willingness to maybe promote their own contracts. What are your thoughts as a panel on that statement?
I think from a national perspective, the NBA was supportive of it, Leanne, weren't they?
Yes,
it's
right.
Just as I said before, it's just that Danita Warren manages national, whereas we're more likely to get support from the national entity. Although I think when you met with the Victorian president or CEO, Amy, and they said, oh, no, we're happy to support it. So even though they've probably got a vested interest in generating revenue for their MBA, local MBA contracts, all the builders we work with, they would not want to be generally engaged directly by the client, because I think often for the builder, it is far more risky going into a direct contractual relationship with a layperson who often hasn't got that ability to assess what's fair and reasonable, that things are not manufactured in a factory, there's kind of tolerances and all of those kind of things. And an architect plays a very vital role in that independence and assessment and what's a defect, what's not a defect. So I know a lot of the builders we work with prefer to have an architect intermediary.
And perhaps, obviously, ABIC is, co-authored with MBA at a national level. Perhaps it's then each chapter taking that conversation to the MBA at a state level to have that discussion to see if there can be any, discussion or traction that can be made when approaching the banks. But ultimately, it is that misalignment of, then the MBA are sort of wanting to promote their own state-based contract because that's where they get a lot of revenue. So there is that tension there, I guess. But
and I noticed Sam Crawford, who's had a lot of issues with the ABIC contract in Sydney, said that they met with the New South Wales NBA reps and they weren't interested at all in helping. So I think it is a challenge.
Interesting comment from Tanya Jones on the chat as well. She says that project home builders are a massive market sector for the banks, and indeed, yes, they are. Their voice is much louder than the architects, and they'd surely be lobbying the banks for the use of the HIA contractors. They don't want architects involved. Again, trying to minimise our involvement, and it's really quite depressing to see that. What are your comments, and do you agree with Tanya's comments on that?
Yes, we would agree that HIA certainly has a vested interest in promoting their contracts and project home builders would also use that.
I'd also say that I would think I could be safe in assuming that most volume built houses are not designed by an architect either. So we're kind of completely irrelevant in that sector, and not all,
architecturally
but
designed,
the majority, yeah.
Architecturally designed buildings, unfortunately, have always been a very small percentage of the overall construction industry and the kind of, particularly in that residential market. So I don't think that's changed. It's just, I guess, convincing or advocating to the banks that on those projects, the low risk nature of ABIC and the desirability of the client, I think, hopefully might be our best way of convincing them, past the HIA and MBA contracts.
Michael might have dropped out.
I'll just keep, there was something that Tom's written here. Dr. Vital Cole-Patton at the University of Melbourne has just released a study on construction defects and dispute in residential buildings using VCAT data. That would be interesting.
That would be good, yeah.
Clearly, yep. And then Tony Trobe in ACT said, could the AIA MBA prepare a generic contract with a range of expanded stage payments included to approach the banks with? I mean, the challenge is, so in Victoria, I think is it Tasmania and New South Wales, I think, that stage payments have become mandated they're not even allowed to do progress payments anymore, which is why there's a real challenge. That's not the case in Victoria. I'm not sure about other states. So I can only imagine that causes even more angst.
I noticed that
Josh has just said that, yeah, it is Tasmania, it's law, have stage payments. So,
and I think there's an argument that was raised about New South Wales that it was law to have stage payments as well, although we had actually disputed that interpretation. So,
yeah, I know that Sam Crawford's on the line. I know he knows a lot about that from a New South Wales perspective.
There's something on here that maybe, Claire, you might know more about. It's about renovations often don't have a slab or major framing or lock-up stages.
Yeah. Not
covered in a simple stage contract. And how is that assessed? Why would we pay a builder 5% before they even walk onto a site?
No, I mean, it's absolutely true. You can picture that a volume built house very much falls within that kind of traditional slab on ground, frame stage, roof, lock up. But it doesn't, it's very different often on a alts and as. I mean, we even find even with a new build, I suppose it's generally the kind of frequency of payments, but yeah, I mean, I still think there's the MBA from their members. I know a lot of the builders that we work with who would be MBA members would agree, and I think that it is stronger to kind of have that voice, not just from the institute. I think always the banks feel that we're being protectionist, and yes, while it does kind of the consequences have sometimes led to architects losing work, but first and foremost, really, it's a consumer protection issue, I think, and I think it's a much stronger argument to be kind of leading with that angle, that this is not about us being protectionist for our own sake. It's actually getting a good outcome for our clients and a fair, playing field for both contractor and owner.
I just had a message from Michael. Is it our failure?
Oh, has he? Oh, very good. Well, maybe it's 12:45. Maybe we'll keep going. Maybe we'll go through the results. Leanne, what do you think? I can kind of scroll down and see what they are. So over the last 24 months, how many residential new or alts and ad projects has your practice completed? So the resounding, 64% was up to 5. And then following that was kind of 5 to 10, which doesn't surprise me. The reason we asked that was what we were hoping to then do is that with the data, I mean, this is more your area, Leanne, but given that we've had 101 votes, that then we should be able to kind of say that we can kind of multiply these responses to say it's actually affected, 500, we're talking about whatever the data will say, 500 projects rather than it just being one project per person. So it helps us with our data results. On average, how long does your single residential new or alterations and additions project take to construct? And 58% said 10 plus months. shortly behind that 6 to 10 months. So less work. And the reason we included 3 months or less was very much to kind of articulate that none of our projects really can be built. You can basically do a kitchen in 3 months, but you generally can't build a house, unlike the volume built market. What is the typical construction contract value for single residential? And the 44% were sitting between $500,000 and $1 million, with 26% between 1 and 2 million. And again, I think that's a really vital bit of information versus, say, $300,000 new builds.
Mm-hmm.
Do you use ABIC contracts for single residential? And 44% sometimes, and 40% said always. So 84% together is that they're used fairly frequently. And if you don't use ABIC contracts, why is that? So there was a fairly even spread with banking lender issues, builder refuses, 14%, or client has an alternative. It would be interesting if people could put some notes in the chat. There was 44% actually said other. I think someone said that they put other because they wanted to choose multiple responses. But it would just be good
too, Claire.
Yeah, so it would just be great to, if people could kind of maybe list what their others might have been, just to give us a bit of an indication, given that there was 44 odd people. If you've encountered any bank lender issues with ABIC contracts, what are they? Select as many options as applicable. Lender enforcing stage payments rather than progress payments was 41%. Interestingly, 28% said I have not experienced issues with lenders when, can't read what the end of the sentence says, so, which is quite interesting that 28% haven't had any issues. When using an ABIC contract, would most of your single residential projects hold security or retention on the builder? And 66% said always, 16% said sometimes, and only 2% said never, and 16% not applicable, which would be, again, if people could kind of list why it wouldn't be applicable. But yeah, what's that? 82% either sometimes or always use retention. And I think that's a really key advocacy point for us. That's the questions. So where to from here, Leanne?
I guess there's a few more questions that have popped in the chat.
Oh.
I saw a comment from Gary who's saying if they can't use ABIC, then they step away from contract administration and let the builder and client work it out themselves. How's that? I would be interested to know how many phone calls you get, Gary, once things get on site.
Yeah, the challenge is, though, too, is some people, we all know that contract administration is not a profit centre. It's generally a phase that costs, we're lucky to break even at, sometimes. But often it's a critical phase, A, for the client, but B, for the integrity of the project too. So it's a difficult situation if people are being kind of, excluded from the contract administration phase. And as we all kind of get drilled into by the insurers, that partial services can become problematic with risk and liability.
I think you can also potentially say you would document slightly differently if you knew you weren't doing contract administration from the outset, because to just be more thorough. It's thorough anyway, but it's a different proposition if you're not there assessing and overseeing things as they're being built. Gary's response to my query is not many queries when they know they have to pay us by the hour.
Hopefully you're still happy with the design, Gary, when you go back for a coffee at the end. Oh, Michael's back. Michael,
I'm
we
sorry,
hope you can step on your toes.
Sorry, I'm now hotspotting off my phone because
you've got a blackout.
Totally fine. So sorry, we've just had a power failure in the street. I think everybody's on the air conditioner, so I apologise.
So we stepped on your toes, and we've run through all the
further
results.
Questions?
We've gone through the results, so I'm sorry about that. We didn't know whether you were coming back, so that's probably your favourite bit, Michael, is it?
Yeah.
No, please. No, I'm dreadfully sorry. This is the 74th lean-in I've done, and yeah, sadly, the only time when I've had a blackout in the street. So apologies for that. But anyway, that's the last one for 2020. We are now done.
Great.
Thank you. All right, great stuff.
Maybe the Belinda sent this through actually the other day on email, but she talked about a project for clients who work in a remote Aboriginal community. So they wanted Belinda's team to administer their contract because they'll not be here during the construction, but their bank will not allow ABIC. So I think you might have asked, Belinda, given if they're not allowing it, on Acumen you could look up the special conditions or additional clauses that have been drafted to complement an HIA contract that does give an architect a role, an official contractual administrative role. I haven't used that amendment, but Leanne pointed me to it on Acumen yesterday.
And they're on a state-by-state basis, and they're for new builds as well as alts and adds.
Yeah, I think the only state for some reason was South Australia, doesn't permit it for some reason. I'm not sure of what why that is, but very good. I think, have we lost Michael again?
No, he's still there.
Oh, he's just, okay.
Yeah.
You might be able to answer this. Is there any similar clause that you think that could be written into the MBA contract? Or has that ever been discussed with the MBA?
Not that I'm aware of.
Okay.
Maybe the thought was it was kind of counterintuitive. We'd end up going down a slippery slope of then the ABIC disappearing altogether. So,
no,
and I think the HIA seems to get used far more than even the MBA as a kind of,
And it's my understanding the MBA contracts are different in each state and territory because they're written differently for different purposes.
Michael seems to be flicking in and out, but I don't know whether we should kind of wrap up. And how will so this has been recorded.
No,
here he is.
Here.
There you are. Okay, good. Okay, over to you, Michael.
Yeah, so sorry. Yeah, no, that's totally fine. So are there any other questions that have come through? We're just going through, obviously, the chat, Claire. Is there anything else that you wanted to address before we close out?
I was just saying if anyone... people had said, some of the people had said the reason they had no issues with ABIC is because people have got they're funding their own project, or they've got substantial equity, therefore the bank considers them as less of a security risk. So that's interesting. Yeah, I tend to.
What we'll do, if that's okay, is we'll take a record of the chat history today. So what that will mean is that if we have any further questions, we will reach out to you with your permission, if that's okay. If you want to continue to contribute to the research that we need to be able to approach and battle the banks on this issue, we will be able to reach out to you. So Leanne or myself will be in touch with everybody on the chat who's contributed. If we have any further requests for information, I'm sure that you'll hear from us in coming days. Yeah.
But I suppose, is it that where to from here, Leanne? It's really to try and gather this. I mean, we were kind of umming and ahhing as to whether we had at the end of the year, but it's been nice to gather as much as we can, given that everyone's busy. But then we can kind of hit the ground running early next year with compiling this and then start, knocking on doors. I mean, sometimes it's even that, there isn't the kind of public person, but I'm just thinking off the top of my head, there's really senior credit people at NAB that I'm working on a big project, and it's almost kind of going in and leveraging contacts in other sectors and saying, right, who can we, coming in the back door and trying to find who we can talk to at the big four, and making a bit of a beeline and a strategy as to that advocacy piece, and then being able to report back to members in the chat next year.
If any of the attendees have any high level contacts at the banks, they could just let us know.
Yeah. And if you wanted to reach out quietly in terms of on a private chat, feel free just to email, private message me on the chat, and then I can pass those on to Claire and Amy and Leanne, of course, as well, if that's okay. What we will do, I think let's leave it there. I know there are questions are coming through. There's still comments coming through, but thanks everybody for joining us today. Hopefully you found this beneficial. We certainly have. We'll take the research and we'll take your comments. What we're going to do, and like Sarah says, where to from here, we'll work with Leanne, we'll work with Amy, and we'll work with Claire to get a positioning statement together, to do some education, to make ourselves more aware and known to the banking sector as well. So I do hopefully think that this is a really great stage for us to take with much energy into 2021 for a renewed effort to really engage with the banking system. So thank you very much for all your comments, for your votes today as well. It's been really fantastic. And of course, a massive thank you to Amy Goodwin, to Claire Cousins, and to Leanne Hardwick for appearing on our panel today. We really appreciate it. So what we might do, we might leave it there if that's okay. But thanks everybody for joining. Have a safe and wonderful Christmas and a lovely break over the festive season. And we look forward to catching up with you on another Lean In 2021. Thanks again for today, and look forward to sharing with you next year the outcomes of today's meeting. Thanks very much. Stay safe. See you soon. Bye-bye.
Thanks, Michael.